Aren't you interested in learning breakthrough wealth building strategies, such as how to flip a home in less than 2 weeks using other people's money with no real estate license, or how to build a low-cost home-based business? You can discover how to take passive income from any source and invest it into real estate, stocks, or business to become financially independent investing in any market with Residual Roads Business Institute. Collaborate with Andre and other Residual Roads advisors to create a free action plan and start implementing strategies today. Go to www.residualroads.com or email info@residualroads.com. Welcome to the Investing Uncensored podcast. You've been searching for different ways to become financially independent or generate passive income to live out your life's purpose as you've seen others do it, but need insight on how. Well, get excited because here you'll discover the tips and resources to fulfill that need. Andre Stewart has spent more than a decade successfully making it happen for himself and others. This is the Investing Uncensored podcast. And now here's your host, Andre Stewart.
Welcome to another episode of Investing Uncensored. I'm your host, Andre Stewart. And today I'm happy to bring you guys a great guest. He has some experience with bankruptcies, and lately in the news, I don't know if you guys are following, but there's been quite a few bankruptcies, and considering what's going on in the economy, I think it'd be good to have someone with that kind of background. Not only that, he has other expertise that I want him to share with you guys. So Rob, if you can, please give us a quick background about the bankruptcy that you mentioned before and all kind of other expertise that you can share with us, considering what's going on with inflation. We've seen all these different bankruptcies. Give us a bit about you and how you got started in financial advice and telling people about bankruptcies and how to head for inflation.
Thanks, Andre. I appreciate it. Thanks for having me on here, and I appreciate you reaching out to have me here. So I started many moons ago. I've been in the real estate and banking industry for 20 something years. I started off doing some fix and flips, lending some of my own money. I owned a mortgage brokerage back in New Jersey and in New York back in 06 and 07. That led me right into the Great Recession. I mean, going into that Great Recession back then with a big subprime mortgage crisis, I had it going on. I had money. I was lending money. I was driving around in my convertible Porsche, single, top of the world. And, I was just enjoying life. Now, I'm first generation Italian. And so my parents came, as they say, off the boat and didn't have a college education. They, were educated in the school of hard knocks coming here as immigrants. Mm-hmm. My father drove a bus in Manhattan. My mother cut hair. They knew how to save and be frugal and work hard and save money and build in real estate. And they did very well for themselves in real estate. So they didn't have a lot of education, and they didn't have a lot of guidance and education to pass down along to me. Not that they were bad parents, they were great parents, but they taught me a lot of values, traditional values of hard work and stuff. And so the Great Recession comes around and it caught me with my pants down. I was struggling. I was on the verge of losing everything. I was buried in debt at that point, thought I could dig my way out. And then my income was completely severed because no one was writing mortgages anymore. And so, it was hard for me at that point to swallow my pride because I didn't want to disappoint anybody because we're proud people as Italians. I was, confident, but I lost that confidence. It turns out I sucked at real estate investing, and I didn't know that until it actually hit me and the reality hit me. And so I went into a little bit of a depression. I had no confidence. I didn't think I was ever going to be successful again or what success was. And so I had a lot of doubts, but I had to move on. Life doesn't stop. So, I was being called a deadbeat. I couldn't pay my bills. I was labeled as that deadbeat. But I found that sometimes bad things happen to good people. And I started to forgive myself and not judge myself so hard. And at that time, I actually was dating my girlfriend then, but now my wife of 14 years. And she wanted to help me out. And I was too proud to let her help me out too. And I'll never forget the day that she again offered to help, and I just went off on her. I just, emotionally, I just had it enough, and I blew up at her and started to make her cry. And it was at that point that I said, yeah, that just hit my gut as a man. That just, totally crushed me. I got a good dose of humility and admitted that I was a broken man at that point. So I had to dig myself out for a better life, not just for me, but for her too. And so I said, this time around, I got to play some offense and some defense. I went to law school to become a paralegal because I knew that getting into the legal system and how a lot of these illegal foreclosures were going on, I wanted to know that game. And there was a way to do all this, but it was a hard way to make money. So 2 days before we got married, I filed for a Chapter 13 bankruptcy. And it was only a couple months after that we found that we were pregnant. And it was just a year later that we had our first daughter. And so while I was still in bankruptcy, I had my first child. And then I was obviously blessed with the responsibility of being the steward of somebody else's life. It was at that point that I said, maybe I'm not a deadbeat. Maybe God did have some faith in me and gave me a second chance to prove my worth. And so now I took it seriously that I had this responsibility, and I wanted to really make a good comeback and really make it last and really do it the right way. And so I rededicated my life to, protecting my family and prospering. And it wasn't about me anymore. So I went into this bankruptcy. I went to law school, and I went after two of the largest banks, too big to fail banks inside of my bankruptcy, who were doing illegal foreclosures on me. Long story short, we went after them. They ended up crumbling, paying my entire bankruptcy estate, all my creditors, all my attorney's bills as part of a settlement. And I walked away with a big fat check. I actually won. And so I took that big fat check and I said, now that I'm on the back end of this, and I saw how the banking system worked and where the tricks are and what they do, I wanted to be a part of that game, but I wanted to do it better. And so I decided to start my first private fund in 2014, buying non-performing mortgage notes. I'm still in the banking business, but now I'm on a distressed side of the debt, and I'm working the backside of these loans in a secondary market. And it is an awesome business, and you really get to do well by doing good. So this time around, rebuilding my business, rebuilding my career, I'm playing offense and defense because now it's not about me anymore. So I now bridge the gap between Wall Street and Main Street, and I've been doing it ever since 2014. So coming around to what we're seeing now in the world with, economic instability, geopolitical forces, creating a lot of turmoil, a lot of conversation about defaulting on debt, government debt, corporate debt, the stock market's being down, a lot of negativity, a lot of economic headwinds. I look at this as opportunity now because of what I've gone through. So what I didn't know at the time was what I'd gone through is really going to be a blessing in disguise, preparing me to help others now in these days to get through this economic whirlwind that we're about to enter into, because I think there's a ton of opportunity for many people to do very well in these down markets and these down times that we're about to see. So actually was a blessing in disguise what I'd gone through. So that's I was going
to say there's a lot of parallels. Everything that you were describing is kind of what's going on right now, right? There's a lot of people who are, when economies do bad, right, that takes and puts pressure on households. That's why you see the crime rate going through the roof. Yeah. And so right. I think what a lot of people don't see, or they don't make the connection to, is that when economies are collapsing, like we're having right now, like in similar to the Great Depression, the Great Recession, you see how much, like every city's different, but like people are just going about their days and they're not like, wow, okay, this person's breaking in here, or they're breaking into this shopping mall and they're stealing this, or they're stealing cars that are stealing catalytic converters. There's a connection to that, right? And there's a connection to mental health. All of these different things play a part into when economies are breaking down. And like you said, you did something with your spouse or your girlfriend at the time because you were feeling the pressure. And so I think people go throughout life and they don't make the connection with those. Those are clear indications. Even though they're saying the economy is doing great, all the signs are saying the opposite. So based on your experience and you going through that, give me some specific parallels that you see based on like what I just said, indicating that we're going into some crazy times.
Absolutely. I think you're 100% right. Because let's look, a lot of this, you got to look at human behavior. Okay. Not that I'm a doctor, behavioral science, but I've got two kids. You kind of get to be pretty good at behavioral
analysis.
Exactly. And when you're parents, yes, you're definitely doing the behavioral analysis. But you become aware, and you like, you see how people act and react. And so let's talk about that a little bit. What I found in all the years that I've been doing this and working in distress, and here's one of the things that I've said. No one else says it, but I did when I was doing foreclosure defense and helping homeowners stay in homes. I was probably in about, I don't know, 4,000 or 5,000 different homes at people's kitchens, talking to them about how they're going to get through foreclosure and stuff. Saw a lot of people, a lot of distress, and there was a lot of common underlying themes. And I found out two things that people want, especially when they're distressed. But I think in general, two things people want out of life. Number one is to find their happiness. And that's defined differently for everybody. Unfortunately, I think we have a lot in our society and culture that tries to grab that narrative of what happiness should be.
Oh my God. Yeah.
And it's a false narrative.
Social media.
I think happiness is subjective. And what it really comes down to, look, we have a lot of division going on in this country and in the world. And I look at it this way. We all bleed red. We're all the same. We all have a heart, and we all have some love in our heart, and we all want to be loved. And if you can look at it from that common denominator of love, we're all the same. And so happiness is the same for everybody, and it comes from a place of love and comes from the heart. But it's defined differently for everybody and what that really means. And so if you're lucky enough to get to that happiness, the second thing people wanted was more time to spend in that happiness. Because if people are lucky enough, and not everybody is lucky enough to find what happiness is in life, but if you're lucky enough to find what it is, then what I've seen happen is, why do we waste so much time looking for the things and getting distracted? When we found what our true happiness is, I just wish we had more time to spend in it.
Correct.
And so let's look at it from that context of what we see going on today with crime, mental illness, and divisions and economic status, right? Because we're trained that happiness comes from having more commas in your bank account, or having the latest material items, that we create, social status as defined as success. And because all these false narratives are out there, people are trying to climb up that social status, that ladder of social status. As I found out too, that sometimes it's a rigged game, sometimes that it's not sometimes of your doing or of what you're lacking. It's because sometimes the rules get changed when you're getting too close to the top, and they say, well, the big thinkers that are out there that are at the top, well, we can't have so many people sharing the pinnacle with us, so let's just change the rules, change the game, and we'll let some people fall back down into the economic abyss because we can't have them get too close to us. And then part of what we're seeing going on is actually some of that as well. What do I mean by that? Well, let's look at inflation, right? Everybody needs to, whether it be buying some milk, some eggs, or just putting fuel in the car, everybody's affected who holds $1 in their pocket or their wallet, wherever they hold their money. Everybody's affected by that. Okay. And so when they inflate prices, which is not really inflating prices, it's actually devaluing the dollar.
Currency, correct. Mm-hmm.
Exactly right. And so I actually heard this term the other day, which I just adopted, which I thought is a great way of saying it, that economic measurement is really measuring everything by purchasing power value.
Correct.
How much are you able to purchase with those green pieces of paper or coins that you have in your pocket? How much are you able to purchase? And when we don't have the controls of how far that money goes for us for acquiring things, then we're never in control. Then we're in a rigged game. So while we try to climb that ladder of social status, we sometimes are deceived to think we're actually in control, and we're not. And when you understand the game and how the game is worked and who's playing against you and who's playing with you, that's part of your first step of getting to happiness. Forgiving yourself first, because most of it has nothing to do with you. Most of it has to do with the game.
I always say that. So it's like I travel a lot. I spend a lot of time in Colombia, and the cars, your closet is not that big. So there's the values are a little bit different. Like you're saying, like the status or for happiness in the US, the bar is extremely high because of what other people see other people's lives going. You know what I mean? So you hit the nail on the head with that. And I think that's more so a problem. It's obviously a world problem, but it's more saturated in the US. It's like,
absolutely.
it's almost hard to please certain people. You could have the biggest house or a nice house, or you can have a nice car, but you want a bigger car, you want a nicer house. It's just kind of how we've been programmed in the US. And that's why I like spending a lot of time out of the US, because it's kind of refreshing to go somewhere and not feel the pressure of having to do certain things or be expected to do certain things because you're in certain positions or doing certain things. So I think that's...
You're going to places that have a different definition of happiness.
Exactly. Correct.
Right? And sometimes it's to slow down, and sometimes it's to relax, and sometimes it's to go to a beach and just hang out with family and just laugh and enjoy and just take pause on the simple things in life.
Most of the time when people look at the US and they say, all you guys do is work, work, work. Yeah, I mean, we got to work, 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 because like you just said, our currency now pays for less because inflation, right? Our purchasing power over the last, 50 years has decreased so much. And again, if you go to another country, the cost of living is so much lower, but also the cost to buy certain things or the income is also lower. It matches. So I'll tell people all the time, if you go to the US and you got to pay, let's say $1,000 a month for your mortgage and you're making $2,000 a month, obviously that's taking half your paycheck. What's the difference between you going to Colombia or somewhere else and they're getting $500 a month and their mortgage is $250 or their rent's $250? It's the same thing. You know what I mean? But they're also being able to get access to better food at a lower cost. It's just a different lifestyle. You know what I mean?
You're absolutely right. And so where I was going with that too is one of the things that I've learned over the past years is that we go through cycles. We go through economic cycles. We go through debt cycles. We go through business cycles. We go through political cycles. We go through world order cycles. The world is constantly changing on different levels all the time. There's all these outside forces. And so when you understand how all of that works, you can position yourself in a place where, because there's always going to be winners and losers, always. Where certain people lose, there's always somebody on the side gaining. And that's where the imbalance comes into play. And we're seeing a lot of that imbalance here in the US. And debt and credit has a lot to do with that. Debt and credit is a divisive tool where the haves and the have-nots have a huge gap between them. And again, that's done because the system is imbalanced, because there's also greed in the system. And it all comes back down to what I said, human behavior. Those that are greedy and those that are not as greedy. And it's a lot of imbalance. And it goes to, 7 deadly sins. But when you understand all that and see where it comes from, you can get yourself out of that perception and that mindset and then operate from a totally different place and rise above it. That's what we like to do and think of it that way.
With what you were saying, with obviously the valuation of our currency, with inflation being high, what kind of solutions do you have, with people listening? Because inflation's killing, eating everybody's finances up. So what kind of solutions, because you're dealing with distressed properties. I started my career in real estate doing the same exact thing as foreclosures, talking to people at the table, doing the same exact thing you did. So I understand that. Well, we talk about that on the podcast too, but what kind of solutions can you provide, how people can navigate this time of high inflation?
So there's a number of things. You can hedge the currency. You can hedge your risk. So here's what we do. So one of the things that I found when I went through my bankruptcy and I was in the middle of all of the banking system and stuff, I found how the banks did it. So that's one of the good things about going through what I went through, is I really saw what they started putting together. And what I found that the banks never lose, because they have these insurance policies on their losses. They're always passing the risk to somebody else. And ultimately they pass the risk to their shareholders who buy their stock in the public markets, who buy their securities. So I don't do any investing in the stock market. I think it's a sucker's bet, because that's where they dump all the losses. They take all the good stuff and they throw all the losses into the stock market. They prop it up so they can get people to come in and buy in, and then they dump all their losses there. So again, it's a rigged game. But I found out how they did it, and they did it with insurance. And there was nothing in real estate that insures our losses as investors in real estate. Mm-hmm. And then I found something, because I was looking for it, and I found life settlements. Life settlements as an investment, abandoned life insurance policies. People that either can't afford them or have no more use for them. Those policies, they are very similar in how they work. They're very similar to NPLs, non-performing loans. And coupling the two gives you a huge advantage on insuring your own risk passing the risk off to an insurance company and putting more money in your pocket. So the way you beat inflation is to just outpace it. So, then we got to get into what you really believe inflation is. Is it really 4, 5, 6, or 7%? Or is it really where I think it is in the double digits, mid-teens? Right? And so that means fine. So if I'm losing my purchasing power by, for argument's sake, 15, 20%, then I have to make sure that my income outpaces that erosion of my wealth and purchasing power. So I got to do better than 20% on an annualized basis. Hard to do that. That's part of the reason why I stay into the distress, because you can buy things at bigger discounts, which will give you a leapfrog chance to get ahead in your returns. That's also why I buy life insurance policies to couple with that, because those are also a form of distressed assets. And so when you buy these things and you're putting your money into these investments and your money's eroding at 15 or 20%, but yet they can produce 20 and 30% return, it's putting something like that together where you can outpace the rate of erosion that inflation causes. The other thing that, I've seen people do is buying precious metals. Gold and silver. And it goes back to what you said too, is the catalytic converters that people are robbing. Why? Because of what's inside those catalytic converter. I forget which one it is. Is it a platinum or it's something else that's inside the catalytic converter? That's a precious metal. It's very, very valuable.
It's platinum.
What is it? Platinum? Okay.
Mm-hmm.
Yeah. So there was another precious metal in there. And
it's
so, cool. and they grab them and, they go and make money on them.
Correct.
And so you get into a level of survival that everybody's trying to get ahead. And, it gets to a point where you're not, when you're in the prosperity part of the cycle, everybody wants to, again, keep up with the Joneses, as they say, and get all those material things. But when you're on the back end of the cycle, where we're going into a recession and a depression, it falls back into defensive mode and survival mode, where I don't care what everybody else is doing. I got to take care of myself, and I'll do whatever I got to do to take care of myself. And that's when you start to see the rise of crime, and you see the rise of mental illness, because they may not necessarily see a way out of where they are and see the answers or see past their trials and tribulations that are right in front of them. So part of the challenge is seeing through the obstacles in front of you to see the light behind it. It's a mindset thing.
It's true, 100%. Everyone I bring on here, we all have similar backgrounds. We all really talk about mindset, because that's kind of where everything starts. So my question with Grit Partners, how do you guys help people out? Like, what is your, I guess, product or service to help people in times like right now?
So we serve 3 different parts of society. We serve the banks in that when they take their toxic assets and they want to dump them in the dumpster behind the alley, we're the ones that pick that garbage up and turn them into gold. Mm. We serve investors that want to get a good return on their money by using their money to grab more of these assets and turn them into gold. And the third facet of people we help are those borrowers on the other side of those loans. And we try to modify their loans, get them into good payment, rearrange the debt and the credit they have with the mortgage so that they can sustain home ownership, and try to reduce their payment to what's sustainable based on their income or their economic circumstances. So we hit 3 different facets of people in what we do.
So you guys take the funds from, say, investors, and you go and buy distressed assets like we're talking about, and you kind of, I would say, refinance the debt for those people in those situations, or you take over their property, put them in another property that might be more advantageous to their income situation.
No, we go strictly for the paper. It's a high volume business, and we can get through a lot more deals and help a lot more people when we just buy the paper and just modify their payment terms. Because you're buying that stuff at a discount. So for argument's sake, if I bought $100,000 mortgage, and we'll just make up a number, it's I don't know, what is a monthly payment? It's we'll call it $500 a month. Mm-hmm. I know numbers probably don't make sense, but let's say it was $500 a month on a $100,000 mortgage, and I'm able to buy it at, I don't know, we'll make up a number, $80,000. Okay. Now I own that paper, and I can make their payment into $400 a month, which makes a world of difference for them. And when you do those calculations, $400 a month on an $80,000 investment ends up being, and again, I'm making up. I know people are going to write these numbers down and say my math is off because I'm making it up off the top of my head for illustration purposes. But my point of it is that when you buy these things at a discount, it lowers your basis in the investment so that the cash flow on top of a lower basis gives you a higher yield. Just the way the mechanics of the math works.
So you guys are basically buying non-performing notes, right, from the bank. And you get them at a discount because they obviously don't want them anymore. So once you buy the note, you obviously control the property. You get the deed or the person keeps it?
No. Just the mortgage. We don't control the property. The homeowner still owns the property. But let me say something, okay? That's a great point, okay? Why the banks and insurance companies always win? Because they operate from a philosophy where one of their philosophies is to own nothing and control everything.
Correct.
Control.
Yeah.
And one of the ways you do that is with debt. Correct. When someone owes you money, you can control their behaviors because of what they want. They want the house, they want the property, they want the social status. Okay, then we got to come to terms on what the debt is. And we are a society of a debt prison. And so that's why I've taken that position to go to the debt side of the banking side, not only to do well financially for myself, my family, and my investors, but we can do this in a way where we are deleveraging people the right way and helping them to stay in the homes as opposed to going after them. So we're really cleaning up a mess of the banking system and of too much credit that's in this country, and we're deleveraging the country through the process.
Have you ever thought to yourself, I wish I could get into real estate investing? You can change this as quickly or as slowly as you want to now. Imagine yourself networking and making new connections in real estate globally, or buying an investment property in a market or country that fits your needs. People do. They know what I'm talking about, and now you can too with InvestFar. Connect and join the network. Remote investing made safe and easy.
I know this might be asking for the golden egg, but how can listeners find distressed notes to be able to purchase? Because a lot of times when I worked at the bank, we would have people all the time come in and say, can I get access to the distressed notes that the bank had? We obviously couldn't do that. But how can someone get access to distressed notes in this particular case? If they can't work with you directly, how can someone just go on their own and find notes?
It's a very closed, tight-knit community, and it's all relationship based. Let's think about that for a second. So I think you'll verify what I'm about to say too. Okay. Banks are afraid of risk and they don't want headline risk, especially now. No bank wants out in the news or in the public domain that, oh, we have some assets that are going bad. That'll shake confidence, and then people will do a run on the bank, and then it drops down their stock, and it just totally screws up the viability of that particular bank. So anytime they have assets that are impaired, they don't make that very public. They try to keep that as quiet as possible. And for a number of reasons, not just for the headline risk, part of how
SVB is a prime example of why they keep it private.
Prime example, right?
Yeah.
But there's also some, arcane rules and old rules that hurt the bank. Because one of the rules is this: if a bank has, we'll make up numbers. If a bank has 10 notes on a very similar property on one particular street in Charlotte, North Carolina, and one of the loans stops paying, one of the homeowners stops paying, okay, and if the bank comes and puts on its balance sheet that it has an impaired loan or a non-performing loan, then there are some arcane rules that say, well, if you're going to mark that one down to, if instead of $100,000 mortgage, it's now worth, $80,000, then every like-kind asset on your books also has to be marked to that value. And so, well, if this is only worth $80,000 now because they can't pay and do some accounting to revalue it, then the entire portfolio of like-kind has got to be valued the same way. And so it's a bigger hit when one asset goes impaired. And so they would rather just sell it off quietly and gentrify their portfolio of these impaired assets. And they curate their portfolio just so they always have the clean assets, a clean balance sheet. They're always looking like they're safe, and they got, no risk assets. And once an asset becomes risky, they try to get rid of it out the back door onto a secondary market. So it's relationships. The quick answer to yours is that it's all about relationships.
Correct. And that's why a lot of people will come in the bank, because I was their banker, and say, hey, can you give me access to these non-performing notes. And I'd be like, at that time, I didn't know. But so I would try to find out. And they were like, no, because a lot of times, a lot of private equity firms, banks have relationships with or other asset managers who might be willing to buy the debt. And so that's what I know it's an untapped market. And I get, because I've been doing real estate for so long, I get people that email me all the time asking me about this type of strategy. But I kind of get to the people at the home before it even reaches the status of the bank where you're at. So I would go and do pre-foreclosure type of purchases. And you're the person on the other side of that taking that note.
Yep.
And the person still get to keep the deed, which is pretty cool too.
Yeah. So from the real estate investor point of view, I've moved up the food chain, getting to the debt. So yeah.
I like it. We have to team up on that because I do want to get into purchasing notes. I never really put the time in to do the due diligence and know exactly how that works. So I'm on the consumer side of it and you're on the business side of it. So what kind of minimum investment do you guys look for when people are like myself? Say, for instance, I want to come in and I want to get on the note side with you. How does that look for someone like me?
It depends. I mean, people have to apply to work with us. We go through a vetting process. And so we invite people to put an application in. And then because we have different tiers, we have different options on people coming in and whether they're going to go into the life settlement side, the distressed note side in real estate, what level of commitment. So there's a number of things that we put people through. Plus, we like to vet people and their character because we have a lot of fun doing what we do as partners, and we got a good mix of personality. So, personality counts for us as well. So we always invite people to come and apply, and then we can always take it from there. What I do like to do, I'll tell you this, is one of the things I like to do as an introduction with people is I try to host on a weekly basis a virtual cup of coffee where I have an open Zoom call, and we're doing other platforms too, not just Zoom. And then I'm going to try to be doing fireside chat on a weekly basis. People can just come in and we just sit and talk about anything business, not business related. And it's just having a drink of coffee or a drink of scotch that I like to have, and just networking and getting to see how people are in a casual basis. That's a way to get to know people.
We have I'm getting together an Investing Uncensored roundtable, so I'll definitely bring you on for that. And it's just people that I've brought on the podcast before, just talking about some of the things we talked about earlier, because a lot of times what I've noticed, at least in the US, is people have this misconception that everyone that made it or everyone that has money came from money. And your family came over here and they were obviously fresh off the boat, like you said, and they didn't have cash, and look at where you are today. So it's more of a education and a grind, and like grit partners, right? You got to have grit to get to a certain level. And like you mentioned earlier, they do try to
say that again slowly. Say that part again slowly. I want to get that bite, that sound bite. Say that again. You gotta
have grit. That's why you have grit partners, man. You know what I mean? And so I understand that. So it's like when you have, there's certain personalities, right? When you have a society that pushes, this is what I'll say. I'll go back to what I was saying a few minutes ago. You hit the nail on the head when you were saying that they changed the game. They always change the rules of the game. It doesn't matter what time in life it is, right? Anytime in history you've seen what they did with the gold standard, right? They're always doing certain things, but you just got to learn how to play the game. So every time they switch the game up, you just got to get back on your game, your knowledge, and just look at the tax code. Everything that they try to do, you know what I mean, or they don't want to do, they put it in the tax code. So one way to play the game is to see what the government is willing to give money or throw money at, because they don't want to do it. So there's always ways to play the game. You just got to figure out or try to be ahead and navigate, before they get there.
Absolutely. And there's a playbook. I actually do. I actually do an online presentation, and I put play by play what's going to happen, what's going on, with capital controls. The central banking digital currency is going to be part of that. Eventually, there's going to be a confiscation of the IRAs and 401ks, and there's a whole playbook of things that are going to happen to get to where we need to be. I didn't put it together, but I follow a couple of other very smart people who have, throughout history seen all this as the changing world orders have and societies have come and gone, because this is nothing new. It's new in our lifetime, but it's not new in the history of the world. It's just a time that we see it in our lifetime. And so the way empires rise and fall, it's the same playbook. And what's happening to us in the US and in Europe right now and in the EU and how China and Russia are getting together along with India, and how there's a battle of world dominance right now. It's all part of a playbook. And when you see the playbook of what's happened and what's coming and where the battle of powers is, you can make your moves because you get a lot of clarity on where to move and what's going to happen. So I think it's important for people to look into that stuff and see that so you can see what's coming.
Like you mentioned, Ray Dalio's book, Principles, talks about that a lot. But if you go back and you look at history, and I always tell people, let history be your guide, because everything you're saying is it's the same thing happened with the Roman Empire.
Exactly.
It's even down to what's going on with the LGBTQ and all that stuff like that. It's the same exact thing with sexuality. It's literally, if people went back and they saw, that's kind of what happened when that empire collapsed. All of the same thing type of situation. So,
but that's part of the challenge we have in society today, right? That we have a lot of the woke out there that wants to erase history so that, we can't go back and go see how it happened before. So we can't become well informed of what's coming. And so we can't make our moves properly. It's part of the control. There's a lot of information control that's going to go on. A lot of this technology where information flows, and having control of the information flow is going to be a big battle as well. So it's a lot going on in a lot of different levels.
I mean, I haven't thus far. People are always like, "Oh, why are you always out of the country?" Because if you can see the direction of one particular country, I don't want to be in a situation to where, say, for instance, the currency in the U.S. is, going the way that it's going. I would rather use the currency that I have now to buy in an emerging market so that when the currency does turn here, I'm in a better position somewhere else, and I'm making income in that particular country that I can use in the U.S. when the currency starts to erode, or in crypto, or whatever the case is.
So you just put a visual in my head. Do you remember all the images, probably about a year ago, of all the images of when we as the U.S. pulled our troops out of Afghanistan and that last plane was leaving and people were hanging on the plane? It's exactly what you're talking about. You do not want to be hanging on the side of the plane when the last plane leaves. Exactly. You want to get ahead of this, and you want to get on a plane before it's the last plane. And you want to get dual citizenship. You want to have alternative currencies. You want to have all these other things that give you your sovereignty and your freedoms that they're trying to take away before you can't.
Exactly.
They are going to stop.
People think it's a conspiracy theory type of thing, but it's like, no, I'm not a conspiracy theorist. I just see what's happening. And that's one thing about owning your own business. And again, even having kids, you are able to project certain things. You know that you shouldn't let your kid do certain things because they're probably going to break the glass, and then you got to clean it up. So you kind of can foresee something happening. And when you have a business, you kind of got to be in front of certain things if you want your business to keep growing. So a lot of times that I'm doing things, it's not because I'm a conspiracy theorist. It's like, no, I see what's happening. And so my podcast over the last 3 years, I predicted every single thing to the T that's going on right now. So a person would be like, okay, well, he's not really a conspiracy theorist. Everything that he's saying is correct. Why would what he's doing be any different? So I think people should just pay more attention to what's going on versus being, distracted by what they want us to be distracted by.
Of course, that's what it is. I raise my children, and you just alluded to this too. I raise my children. They understand the rules, and I'll explain to them the rules. Even in our house, we've got rules in the house. And I tell my children all the time, you don't have to abide by the rules. Not at all. You guys have free reign, do whatever decision you want, but you're going to understand the consequences.
Right.
And so I want you to make your decision by consequences. Very simple example. I tell my children to pick up the toys off the floor, and they shouldn't have their toys and they should put them away. If they say no, I say, that's fine. No problem. I'll do it. And you're not going to like where I put them. No, not the garbage. No, it's okay. I'll do it. You want to do it? Perfectly fine. I'll do it. I know exactly where to put this stuff. Okay.
But you know what, though? The reason for that is because you know that if they're not paying attention, they can step on it. They can get injured. I can step on it. That's what the purpose is, right? You're trying to, get ahead of it before it even happens.
Exactly right. But we train them by consequences.
Right.
And I don't argue with my children. They don't argue with me. I said, fine, if that's what you want to do, I'm perfectly okay with that. Here's what's going to happen. If you're okay with that, then please proceed accordingly. They make their decision.
It's so true.
So it's the same thing in investing, right? If people want to call it a conspiracy theory, fine.
Yeah.
You can use your consequences of thinking that, and I'll deal with mine. thinking I got to get ahead of this, and we'll see whose consequences end up being better.
And I always say the worst case scenario, if I am wrong, then I just have a business in another country that's doing well. And
Exactly.
so it's not a big deal. Like I'm not going to be in the negative. I'm not going to have a bad situation because I did what I did and I was wrong. Right.
What's the consequences of you doing what you're doing versus the consequences of you not?
Exactly. So let me ask you this. What would be something that will make people, what do you think people should rethink when it comes to investing?
What do they need to rethink?
Yeah. What is one thing that someone should rethink when it comes?
I'll give you a pet peeve of mine. Okay. And I just ran into this yesterday. I had somebody on my virtual cup of coffee yesterday who thought he was an investor, claims he's got, money and doing well for himself. But here's what an investor is not that people think are. When you're actively trading on a daily basis, whether it be trading stocks, trading properties, trading options, trading gold, trading cards, and actively, if your business cannot generate wealth with you not being at the helm, then you're not an investor. If your business directly relies upon you doing something actively on a daily basis, you're not an investor. You're just an employee of your business. Mm-hmm. Okay, so your money has to go to work, not you. You're a real investor when your money goes to work and you earn back your time. If you're spending your time to make money, you're not an investor.
Correct.
If you're spending your money to get back time, then you're an investor. That's what they need to rethink. Don't spend your time to make money. Spend your money to recapture time. Put your money to work.
Most people are employed. I think the statistic is like 70% of people are employees in their own business, which is yeah.
Because they think, well, I'm an entrepreneur, then I'm an investor. No, you're not. You're an investor when you're actually taking risk by putting your money into your money making, reproducing itself, not you.
Correct. If you're making money while you're sleeping,
exactly right.
That's labeled investing.
One of the great things about the note business is that when I modify a loan and I can create payments that are affordable for homeowners, I wake up in the morning and they made a mortgage payment. I get a notice, there's a deposit in your account. Great. Somebody made a mortgage payment. That means they're doing. I got one of my first people, 95% of all bankruptcies in the chapter 13, we have the repayment plan. 90, it's a high number. I'm going to say 95, but most statistics are made up on the spot like that one. But there's a high number of bankruptcies in the repayment plan that never make it to the last payment. They usually fail. Okay. Wow. I literally got yesterday my last payment from one of my borrowers who was in a bankruptcy, who repaid me through the bankruptcy. And I almost wanted to send them a card and say, congratulations, you accomplished what most people can't accomplish, is finishing up your payment plan. And the house is almost free and clear now. Going into an economic downturn, they were able to do it. So I'm very pleased that I'm getting paid off. I'm going to get one of my last deposits in the account from them, but they accomplished it. And I helped them do that. So while I'm not going to be making any more money on that particular account, I'm proud that I was able to be a part of that and see that.
Get that business
you get to see some really cool stuff.
I like it, man. I got a couple more questions for you. 2 more questions, and then we have to go because we're coming out of our time. What type of return do you get from purchasing notes and doing what you're doing right now?
So on average, we've been open since 2014 with our particular fund. We're actually winding it down. We've been in the mid-teens. But the mid-teens is an average across the last 7 years that we've had our fund open, but it's not a straight line. When COVID hit, a lot of the court systems shut down, a lot of the bottleneck happened. And so we dropped down, I want to say below 10, below 8. I want to say we were between 4 and 6% for an annualized return because everything got backed up. And then once everything opened up, we shot up into the high 30s and 40s to play catch up. So you definitely saw a dip in our performance, but then it shot up so high. And so that's why I say the average is out, because we went through the pandemic, because things got closed and then opened back up. So we're back on consistency again. And so we are in the mid to upper teens on the NPL side. And that's only going to get better because you're going to start seeing a lot more of this come onto the market. Bigger discounts means bigger spreads, bigger returns. And so we're going to be opening up another opportunity for investors to come in, put some money to work, and really take advantage of this moving forward.
I like it. My last question, and I'm always curious how people get to certain levels. Who was your biggest influence in guiding you to where you are today?
An ex-partner that I had a falling out with, who is now deceased.
Oh.
He was pain in the ass, but I got to tell you, he pushed me and taught me a lot. And that's not, then I have another one. I do have to give credit to two guys that I worked for in Payne Weber many, many, many moons ago when I was in my young career in college. And they taught me, they were the first guys that actually taught me about my entrepreneurial spirit. And they understood me very quickly. And they said to me, we know just by getting to know you a little bit that you're not a 9-to-5 guy. So here's what we're going to do. We're going to treat you by tasks, and we're going to take deadlines that we need stuff done by. And we don't care if you come at 2:00 in the morning after you're out on a drinking binge with your friends doing stuff. We don't care when you come in. We just want the results done, because if I have you here at 9 to 5, we know you're just going to resist us and you're not going to get peak performance out of you. So like, really? You're going to let me do it? Yeah, go ahead, do it. We know you're good. We're going to give you the free reign to do it. And I never want to disappoint those guys. And I always overperformed for them because they gave me that freedom to, for me to have that lateral thinking I had inside of me. And so I worked for them for 2 years, and I've been friends with them, I don't know, for another 28 years or 30 years. But we're still friendly as friends. So I've had some really good guidance in my life.
I like that. I like the idea, what you said, of letting people have, because everyone has a peak time. My peak time is between like 12 a.m. and 2 a.m., 3 a.m. in the mornings when I get the most of my creativity and work done. So I like that idea.
Let people be, what they want to be. And, and so I've also found that there's two types of thinkers. There's lateral thinkers and linear thinkers. And a lateral thinker are the entrepreneurs and those that can make decisions on the fly. It's like being a mariner in the ocean that, if a storm is coming and we got to change waypoints because the tides are changing or some sort of distraction is coming or there's some sort of impediment in the way, mariners can, change the course of the ship on the spot and make those decisions. Whereas linear thinkers are those on the crew that just have tasks to complete. They don't really make decisions. They just execute on task lists and check boxes on execution. So, you got to understand what you're dealing with too. Are you dealing with lateral thinkers or linear thinkers, and really, put them in the environment where they need to be so they can excel?
Linear thinkers, what you just said, typically sounds like a person that would be a good employee.
Yes. Yep.
Yeah. Well,
Yep.
Rob, I have a last question for you. Where can someone get in touch with you to be a part of your fund, and any advice that you can give on how people can get started purchasing notes?
So I'll tell you this, I'm part of my mission is titled Capturing Tomorrow, because as we said before, especially with the mindset and having the right mindset, I think people need to look past the challenges and look at the solutions. The only way you look at the solutions is by looking past the challenges. And so I'm always forward looking. And so I've created this concept of capturing tomorrow. I believe everybody should be looking at not what we're going through today, but what tomorrow is going to be, and start capturing tomorrow today for your finances, for your mentality, for your physical health. Start getting to be a better you and capture tomorrow today. So the email that we set up where people can reach out is brilliant@capturingtomorrow.com, because that's what we want everybody to be. We want everybody to be brilliant at capturingtheirtomorrow.com. So if they email us at brilliant@capturingtomorrow.com, that's where they'll be able to get in touch with us, and we can certainly continue the conversation there.
I like it. Well, thank you for coming on, Rob. And like I said, when we do the Investing Uncensored Roundtable, I will definitely bring you on. You can bring your bottle of scotch.
Yes.
And then we'll have a good chat.
Absolutely. Looking forward to it.
All right. Thanks again.
All right, Andre. Thank you.
Aren't you ready to start a business or grow your real estate investing portfolio? If you answered yes, allow Andre and the expert advisors at the Residual Roads Business Institute to fast track and put you on a path to full-time investing. The greatest transfer of wealth in our lifetime is occurring over the next few years, and you can take advantage if you know what to look for. In order to be successful at real estate investing, you need to learn how to leverage your current resources to generate quick money, big money, and retirement money. Let Residual Roads advisors craft a plan to get you through these phases using little or no money in 6 months or less. Don't wait for a job. Create one for yourself and others. Go to residualroads.com for mentorship, and for our free course, go to residualroads.therapy. thinkific.com.